live webinar tonight on preparedness tips from the trenches on your home and rental insurance. So I'm going to go ahead and get started. Let's see who's here. We're going to give about 5 minutes, I think, here for some latecomers to make sure they get joined in before I start the content. And I'm delighted to see you all here. I understand that most people are homeowners that are attending tonight. So I will focus on that. And I just do a little bit of housekeeping here. First of all, I want to say a big thank you to the Denver Urban Area Security Initiative for their grant funding making this possible today. And I also want to do a little bit of housekeeping, and I would ask you to make sure that you've got something to write on, and don't worry too much about frantically taking notes, because we will make resources available to you. We will send you some links, and we'll also and documents, and we will also make available links to a number of resources that I'll mention. So just know that there'll be other ways for you to get access to this information. Again, we also usually put up at least part of the PDF of the PowerPoint that I'm presenting, so you'll have access to that too. And if you come up with some questions during the presentation, I would ask that you type them in on the Q&A, if you're aware of how to use that, up on the Zoom, and I will either address them during or at the end of the session, or someone will type you an answer with a link that will provide answers for you. So we'll get rolling here. And I'm going to move kind of fast because we have quite a bit of information to cover, but just know you can always ask those questions by typing them in, or we can answer them at the end of the material. Okay. And again, thank you to the Urban Area Security Initiative. And I'd also like to thank Erica Roberts of Jefferson County, who helped make this possible and bring this to the urban area, the Denver urban area. United Policyholders has been a voice and information resource for insurance consumers in all 50 states for over 30 years now. We're your source for insurance subject matter expertise, including buying and claims and legal. And we are supported 100% by donors, grants, and volunteers. So we do not take money from insurance companies or from restoration contractors or anyone like that. We're a trusted source for the media, constantly quoted in the media on insurance matters, and you'll see the link there. And we also are speak up for consumers in courts and legislative matters. And this is a part of our Advocacy in Action program. This was in 2013. I'm right here, and this is our executive director, Amy Bach, and a bunch of our volunteers with the then Governor Hickenlooper, when we signed, helped advocate and get signed into action some consumer-friendly regulations here in Colorado. So we do 3 different programs. Today we're doing our Roadmap to Preparedness program. I spoke about the advocacy, and we also do Roadmap to Recovery. And actually that's how I got involved in United Policyholders. My story is I was living in my home of 25 years in Mountain Shadows in Colorado Springs when the Waldo Canyon fire came into my neighborhood at 65 miles an hour 8 years ago, and really changed my life. And I became aware that we needed help with insurance matters for our claims in my neighborhood, 28 of my dearest friends lost their homes, and my home was seriously damaged. And I got involved and have stayed involved, and am delighted to be able to be a part of this and bring you some great tips to help you be prepared ahead of any type of disaster. We've already kind of talked about the fact that being prepared is much better than sort of trying to deal with the drama of pulling together documentation after a major event to try to help work your insurance claim. So it's really important that we keep our heads around how to document what we have, and that we focus our resources for insurance on those types of policy items or types of insurance that are going to protect what we care about and we want to protect. Because insurance money, not charitable money or government aid, is the #1 source of help following a disaster to help people rebuild and recover. The FEMA assistance that you may hear about to individuals is needs-based, and the maximum grant per person thus far is generally limited to $35,000, and it's only in disasters that are declared a presidential disaster. And that doesn't cover everything. It covered my fire, and it covers major disasters, but not everything. So FEMA doesn't always come in. Small Business Administration loans are usually made available in major disasters, but they can take months and they have to be repaid. And charitable aid is essential, but it generally covers basic or emergency needs. Things like immediate food and shelter and filling in small gaps, but not the cost of rebuilding your home or replacing your possessions. So we really encourage everyone to do what we call an insurance checkup. And this is whether you're buying insurance for the first time for a new home, or you're just renewing your insurance each year. It's great to have an idea of what you need to check on to make sure there are no gaps. So we strongly suggest you contact your agent each year or when things change in your life that may change your insurance needs. Documentation, again, is very important. So you're going to want to inventory your assets and important documents with video, photos, and spreadsheets, and store it offline, off-site of your home or car. And online is a great way to store pictures and videos so that you can have access to them wherever you are and no matter what happens to your home. I'll talk later more about getting a clue report and cleaning it up. This is kind of a kind of like a credit report. It's an agency that collects information from all the insurance companies about your insurance claim history, and it can affect your rates, the premiums you pay, the availability of insurance, and that type of thing. And we want to help you make sure that you're not paying any more than you need to. And then another major step you can take is to harden your home. And by that term, we mean to help make your home more resistant to damage. Some of the things you can do in that regard are installing attic vent screens that keep embers from a fire, a wildfire, from entering your attic and starting a fire. Flood vents are another way you can harden your home. Doing defensible space mitigation with the fire department is happy to come in generally and advise what you could do to help create defensible space around your home. Usually this has to do with clearing bush and debris that's too close to your home and could again help a fire jump into your home and cause harm. And then the kind of materials that you build your home with or replace, such as the roof. One good example is roof shake. Old wood shake shingles are not fire retardant. They're actually very flammable. And most insurance companies will encourage you to replace them with a more fire retardant and impact resistant roofing material. And that can affect your rates and also keep you from having damage to your home and property. With insurance, it's the devil and dollars are in the details. You know, everything's fine print. There's nothing really fun about reading an insurance policy, and it is all fine print. But getting the right kind and amount of insurance can be super important. For example, the cost to replace your home is vastly different than the cost to purchase the same home, existing home. So if you were going to put your existing home on the market right now to sell it in resale, the cost to sell it would be considerably less generally than the cost to rebuild it on that same piece of property. So when you look at the cost or the value of your home on your insurance policy, you want to make sure you're using a replacement value that's realistic. So let's go on and look at that in a little more detail. Let's see here. We do a lot of roadmap to recovery programs. I've been involved in many, and what we find when we survey the participants of the people that take part in the program is that underinsurance is a huge problem. So perhaps someone has an insurance policy that their mortgage company recommended the value for the insurance, and the insurance company agreed. And so that's what you did. You took out that insurance with a major insurance carrier, and let's say it was $300,000 for your home along the Front Range in Colorado. It is uber important that you understand what it would really cost to replace that home. And because of the rising values right now of homes along the Front Range and the demand supply issues that exist following a disaster, the cost to rebuild can be many times higher. We're seeing now, what we're hearing is $300 a square foot plus. So if you had 100, or if you had a 1,000 square foot house, that would be a $300,000 house. So I just, want to make sure I communicate with you guys the fact that this is really something worth paying attention to. Some of the common post-disaster problems that people find with their insurance can be that, again, under insurance, that claim processing can be very confusing and frustrating. There's a lot of responsibility on the policyholder, which would be you, to be able to demonstrate what you lost, even if it's a pile of ashes that's left in your home. You have duties and responsibilities under the policy. And it's good to understand that ahead of time and be able to document your belongings now when you can take videos and store them off-site rather than have to try to do that after the fact. We've learned that the hard way. There can be multiple insurance adjusters. It can be a real challenge. You can hear something from your insurance adjuster one day and then they're off, sent to a tornado somewhere, and you're starting over again with a new adjuster. So it's really important to communicate with your insurance company in writing, by email preferably, and that way you can continue to document the progress of your claim and your understanding of what your insurance will cover. There's also can be issues with your mortgage company, your lender. There can be tax considerations. All of these things can kind of layer on the duties you have when you're working a claim following a disaster. So again, here we have the Black Forest fire and the High Park and Woodland Heights fires were some of the fires in the last 10 years along the Front Range in Colorado Springs. And you can see that in all these cases, around 50% or more of the people felt they were underinsured. So now we're going to dig into the details. When you get your insurance policy and when you get it renewed each year, you're usually going to be sent or given a paper packet that will have your declarations pages. That's going to be maybe 3 to 5 pages in the front that are very specific to you. And then you'll get a form, and that is the insurance policy, the sort of standard insurance policy that applies to you that you've been sold. And within your declarations pages, you will also have things like endorsements, schedules, riders, exclusions. All of these things either add to or subtract to that basic form policy that you're purchasing. And on that declarations page, there are different buckets of money that you're covered for. So the first one would be dwelling, and this is by far the most important. This is coverage A, and it covers just the structure, literally the physical structure of the home. So it doesn't cover the contents, it doesn't cover the landscaping. The dwelling portion, coverage A, is the actual physical hard building. And the way that can be expressed in your declarations page would be like here. This is a current policy in Colorado, one example of a declarations page. And you can see here that under A, there is the dwelling portion, and this particular example is $300,000 approximately, $200 is the value of the dwelling. B is the other structures. These are other man-made structures on your property that are detached from your dwelling. So it wouldn't be a built-in garage or your attached deck, for example, but it might be a barn or an outbuilding or a fire pit or a patio built out in your yard or fencing or things like that. That is generally about 10% of the dwelling amount. And that's another area where we found people along the Front Range are often underinsured. Personal property is the third major area. That's usually C, and that is generally around 75% of your dwelling, but that can vary. And that's an area that you can look at and really think about how much coverage you want, and you can ask your agent to customize that for you, and we'll get into that a little bit as we go on down the road here. And then there's another area that's very important that a lot of people don't really know much about, and that's loss of use, or it's often called ALE, or additional living expense. And that's here, $120,000 on this particular policy. This is a second policy from another company in Colorado from 2020 that just shows the same kind of thing, but it's just printed a little differently. And you can see here in this example, the loss of use or the additional living expense, instead of being a dollar amount limit, is a time limit of 12 months. And this is something you also want to pay close attention to. In Colorado, your insurance company is required to offer you an endorsement to increase that to 24 months. And we strongly encourage that you pay the little bit of extra to get that 12 months of coverage because in general, within a year of a major loss, it's very difficult to settle a claim and rebuild a house. So this portion of the coverage allows you to live in a like for like similar rental where the insurance company will pay that rental cost, that additional rental cost and other additional costs while you're still paying the mortgage on your home that is being rebuilt, because the mortgage still remains on the home that was damaged. And so what this coverage does is covers the gap between maybe you were paying a $2,000 mortgage before you had a loss, and now you're still paying that $2,000 mortgage, but you also have to pay maybe $2,000 to rent a temporary living home. So this is an important piece that we recommend you kick up to 24 months. Okay. So what matters on those declaration pages are that for both homeowners and renters are that you know your deductibles, and that is the portion, I'm going to go back here and show you the deductibles are here. This is the portion that you have to pay, or the amount of loss you have to have before insurance starts paying. So if you have a loss of $30,000 on a roof from hail, you on this policy would have to pay 1% or $3,850 before this policy would begin to pay anything out of its limits, out of that $385,000 limit that you see here. And this is for a wind and hail loss, whereas all other perils on this particular policy are just $1,000 deductible. So there are different, sometimes, deductibles depending on the type of peril and the type of covered loss. Okay. We already talked about the loss of use. Some can have a dollar limit, some can have a time limit, some have both. One may say $150,000 in 1 year. So you want to know that in advance and understand it and make a choice that best suits you to balance the cost you pay for your insurance with what kind of coverage you're going to have when you need it. And then I mentioned the contents, and that is coverage C. And sometimes if you have in your coverage C, perhaps all of your belongings are a certain value, there will be limits within that. I want to come and sort of jump to this. And you're going to want to consider doing some special scheduling of valuables or business equipment that wouldn't otherwise be covered under your contents. So your contents are like if your house was a doll house and you picked it up, turned it over and shook it out, everything that falls out would be considered contents rather than the dwelling itself and would fall under the coverage C limits. And you want to make sure that the contents are insured to replacement value, not actual cash value, which is kind of garage sale value, because when it's time to go replace your things, you're not going to necessarily be able to replace, a 3-year-old television, the value of a 3-year-old television that's been depreciated with a brand new television. It's probably going to be a different value. And so you're going to look in your policy to make sure that the amount and the type of policy is replacement value, and that you make yourself aware of certain sublimits. They're the different types of deductibles. Let's see. Here are some typical sublimits within your policy. So even though you may have $200,000 of contents Part C coverage, you may have limits within that. As a matter of fact, all policies have some limits within that for either the type of loss and or the type of contents that are lost. It's very common for monies, securities, things that are easily stolen or easily stolen and sold to have sublimits. Also, things of higher value individual items, such as jewelry, silverware, firearms, things like that will have sublimits. And generally, business personal property is limited as well. I have seen many people who had home businesses lose, far above the limits of what their policy would cover. It's generally a good idea if you work at home and you have either inventory that you keep for a business, or you have a lot of business property, that you make sure you take out an endorsement or a separate policy for that so that those things are covered. Regardless, it is really important to cover documentation of what you do have. That's going to be the thing you keep hearing me say over and over again. And the way that you can best do that is to document the details with a home inventory. And there are a lot of resources to help you with that. Even if you spend 30 minutes walking through your home with a smartphone, taking a video, taking lots of pictures, and narrate if you're videoing as you walk through. Remember to open drawers and closets and do both the exterior and interior details. If you have wooden floors, for example, if you've done upgrades to your appliances, or you have art pieces or anything like that, where you would want to be able to demonstrate an increased value, it's especially important to pay attention to that in your documentation. And then store that video and those photos in a safe place outside of your home. It is also possible to hire inventory professionals or to get a friend to help you with that. It doesn't have to be done in a very particular way. It's just important that you have some sort of documentation to jog your memory and to help show what you had. We also have, and we will provide you with a link, something called the UP Home Inventory Spreadsheet. And this is a spreadsheet that has a common home inventory listed. And you can use that as a starting point to list what you have and store that. And that's an awesome thing to have. There are a number of home inventory apps also, and you can look into that if you choose to. Okay. We also have another tool that you can use. This is the Match UP Insurance Finder, and I'll provide you with a link to that too, but there's one right here. All of our resources are available online at www.uphelp.org, and you can kind of move around and find different resources there. This is a way that you can get independent insurance brokers to provide you, kind of link you up with quotes from different providers so that you can hope to match apples to apples if you are shopping for insurance and want to make sure you're covering the same kind of endorsements and the same kind of coverage from different insurers in Colorado. So to go over the insurance checkup, again, we really want to encourage you to take notes and keep them off-site. Also, just like you do with your documentation of the details of what you own, you also, when you're shopping for insurance, want to take notes of what was represented to you by your insurance agent. If they tell you you're covered and your replacement value is good, document that in an email back and forth. If you don't have that back from them, make sure you send them an email and you keep documentation of that. So communicate your insurance goals and don't be afraid to ask questions and keep following up to get the answers to those questions. Some of the things you want to touch on when you are either getting new insurance or updating your insurance each year for renewal is that you make sure you communicate to your agent if you have any remodeling that's been done, updates, replacements, and make sure that you get your permits finalized when you do improvements on your home, because this is another way that you can document the increased value of your home. And insurance companies often do use the websites of the county to see what your square footage is of your home when they quote you a price, or when they're looking at the value of your home following a disaster. Another thing you want to consider to bring up to the agent when you have someone move into your home, because that you want to make sure you've got their belongings covered. If they're a renter, you may want to be sure that they have their own rental insurance that covers their contents. And if you work from home or participate in the shared economy, if you have an Airbnb, if you have a care.com provider coming into your house, anything like that, those things can affect the insurance you need as well as the cost of your insurance. And I have a great question here from one of the attendees, and that is, the question is, what if the square footage on the county's website is incorrect? Great question. The answer is get it corrected. And depending on where you live, there are different ways to do that. Some of the reasons that can happen is, let's say you decided to finish to hire someone to finish part of your unfinished basement, but that contractor or you never finalized your permit. And maybe you thought it was finalized, but it wasn't. So you can just go on the county website and see if the square footage is correct, if there are any permits hanging out there, or if it's just an error, and then you can contact the county and go through whatever process they prescribe to get that corrected. I strongly recommend that. That comes in handy if you ever want to sell your home as well. So if you have major changes in your life circumstances, for example, you get married, separated, or divorced, if you're having children, these are all things that you can touch base with your insurance agent and make them aware of. These things can affect your rating and how you're charged for insurance, and they can also help you to be sure that you're getting all the types of coverage you want. Another thing that comes up is most insurers have some sort of exclusion where they will not cover you for liability if you have certain dog breeds. So you're going to want to figure that out, flush it out up front. Better to know in advance than after the fact, and ask your agent about that. So we're providing you here with a list of questions to ask your insurance agent. And I strongly recommend that you look for this information after the seminar and get a copy of it and use it. It's very, very useful. It will flesh out a lot of things that are important, such as endorsements and exclusions in your policy. So I'm going to come backwards a little bit and go over those things with you now because they're really important. Let me see, I have another question. Okay, does the house square footage include the house and attached garage, or just the house itself and not the attached garage? That depends. I can't really give you a straight answer for that. Generally, the attached garage is not included. Unfinished is treated differently than finished, and it depends on where it's listed. What's listed in something like Zillow, or even the listing, if you list your house to be sold, the MLS, that may not be consistent. And how the county has it listed may not be consistent. If you have an unfinished basement, that may not be listed in your square footage, where if it's finished, it may be listed in your square footage. I wish I had a more clear answer for you, but that's about the best I can do with that one. So I'm going to come back to an area that I mentioned matters so much, which is knowing that your dwelling coverage A is adequate. This is extremely important, and really getting down to the meat of the matter here of having adequate coverage should you need to use your insurance. Getting the dwelling value right, estimating that replacement cost for the structure is so important, because everything else in your policy, all the other buckets of money, are generally a percentage of that coverage A. So what is the actual cost per square foot to rebuild the same house? It's kind of hard to determine that sometimes, and it's not always great to just depend on your insurance agent or the mortgage company or the price you paid for the house to do that, because as I explained, that's not a realistic amount should you have to rebuild the same house on the same property. So who can help you with your estimate? We always recommend that you talk to people and not just use internet sources. Trusted local contractors and builders are one place to start, especially if they have dealt with rebuilding homes following a disaster. That can be really useful. And some of them are willing to do that as a courtesy for you, so that you would consider using them or sharing their kindness and recommending them to others. Sometimes your insurance company will send out someone to do a replacement value appraisal. And that actually happened for me when I bought an existing home and moved a couple of years ago. I asked my insurer if they had replacement value appraisal that they would be willing to do. And they paid for it. They won't always pay for it, but they might. Doesn't hurt to ask. And and I found their value to be quite good, actually, and it was higher than our expected, and our purchase price. I have another question here I'd like to answer, and this is a great question. Does the dwelling, that coverage A, include the foundation if it's damaged in a fire, and how about the septic tank? Great question again. And the answer to that, the answers are the foundation of the house itself is part of coverage A. So the house itself and the foundation attached to the house is all a part of the dwelling value. Whether or not your insurer agrees that the foundation is damaged is a whole nother story. And a lot of people find they have a bit of a battle where that is concerned. But if you're looking at buckets of money, yes, that is included. The second part of the question about the septic tank is that the septic tank would be considered an other structure. And you remember back on a previous slide, I showed that generally there are other structures. There's a portion of your coverage called other structures. It's a separate pot of money, and that is usually 10% of the dwelling amount, and the septic tank and other man-made improvements on the property would be under that chunk of money. So thank you for that question. Great question. Another comment I want to make about getting the dwelling value right is that there is home replacement cost estimation software out there, and it's worth, hopping on and seeing what you get from that. And all of these things are things that inform you. They don't necessarily give you the perfect number because it's a moving target, but they inform you. The real estate resale estimates also inform you. Things like Zillow and Realtor.com and MLS listings of comparables near your home, they're a starting point, but they're not going to be adequate on their own. And then the final point on this slide that I want to make everyone aware of is the value of the land is never included in your insurance policy. You may have a small amount for landscaping, trees, shrubs, things like that, but the land itself remains. So you will not see a value for land. Let's see, we have another question. This is from Terry, and Terry's asking about living in the wildland urban interface, which I do also. And she's asking, in the case of a wildfire, would insurance cover flooding from a hillside being charred and then runoff from rain flowing over into the house? And does flood insurance cover that? Another super, super good question. This was a big issue in my neighborhood, my previous neighborhood from my fire. These things actually happen. And the answer is, and I'm going to get right back to endorsements and exclusions. That was a perfect segue. Flood, rising water is not covered ever by a standard homeowner's policy. In order to get surface or rising water covered, you would have to have a specific flood policy. And I'm going to talk about flood policies also a little bit as well. And as far as whether that flood water comes from a charred hillside or rising water from a river, from a hurricane that caused wind driven water to rise, those are all kind of complicating issues. And generally speaking, the only kind of water that would ever be covered in a homeowner's policy would be either falling water, which would be if, say, a tree fell on your home in a hurricane and opened up the roof and falling water came in your house and caused damage. That would be secondary to the damage from the hurricane, and the falling water would generally be considered a covered peril in that circumstance. The other time that water might be covered in your policy, in your homeowner's policy, would be if you had a mechanical failure in your plumbing, for example. Maybe a pipe broke in your home, or there was, someone left the tub running, plugged in, and the water that came from that caused damage to your home. Those things may well be covered by your homeowner's policy. The damage that they cause, the mechanical fix to that in the pipes would probably not be covered because it's not a maintenance policy, it's an indemnity policy that covers damage and brings you back to where you were. A third type of water issue that is generally not covered in a standard homeowner's policy would be water that would come in from the city or from stormwater or a, let's see, we'll go right to it here. Where is it? Water sewer backup type situation. You will want to be sure that you have water sewer backup coverage as an added endorsement to your policy. And I'll talk about those also a little bit more. Let me make sure I've answered that question fully. I think I did. Okay, and we'll touch more on flood insurance too in just a minute. There are over 100 different types of endorsements that you can add to your policy that change the terms and improve your coverage. And a good agent should be willing to go over what they recommend would be useful to you given your circumstances. There are a couple here that we really strongly encourage you consider, and I have those back on the What Matters slide, and we'll send you some resources on that as well, or you can find them on our website. I'm going to touch on them briefly now. Building code and ordinance law is one. This is hugely important. This helps address some of the gap that exists between what it should cost to rebuild the replacement cost of your home in a normal circumstance and the added increased cost to do that now following a disaster. Because maybe your home was built in 2009 and the at the time the building code only required you to have maybe R10 insulating value in your home, and you could use wood on your deck. And now the rules, the building code and the ordinances and the covenants of your community have changed, and they require you to do R17, a higher amount of insulating value of your home. Well, that costs more, requires a bigger foundation. It requires different materials. Maybe you need to use Trex type decking instead of wood, which is more expensive, and that's an increased cost. So this type of endorsement adds an additional percentage, usually anywhere from maybe 10% up to 50% more, that you can add on that will allow for those changes that you're going to have to do in order to meet code if you have to rebuild. And that can really save the day for people. A second version, sort of similar to that, is extended replacement cost. And again, this is a percentage in addition to that dwelling A coverage. I'm going to go back and try to get to one of those declarations pages here so I can kind of show you that. So like here, your dwelling protection here is $385,000. If you have that additional 10% even of extended dwelling coverage, that's another, you know, $3,850 that really makes a difference. And some other things that can affect the endorsements that you're going to want to get are things like I mentioned before, having that home business. If you have a home business where you have a lot of equipment that would not be covered by your standard form policy, you're going to want to add that. If you live in a homeowners association that has maybe some common property and you pay a monthly fee for that homeowner's assessment, that is another area where you may need to bump up your policy to cover what could be a cost you would have to pitch in to share to cover of that common area should there be damage from a disaster, fire, flood, that type of thing. I don't know if I finished, I'm kind of jumping around, but the extended replacement cost is another percentage amount that adds to the additional costs that come in because of supply demand issues when you have to rebuild following a disaster. Then there's those scheduled items that I mentioned, like guns, jewelry, family heirlooms, things of great value, art. You can add coverage for those things. And again, you want to make sure you have replacement cost value on your personal property if you want to be able to replace that personal property. Okay, let's move on down the road again here. Let's see, any other questions right now? I don't see any. Okay, let's see. Some questions you may want to ask your agent if you do live in a community, say you live in a townhome, a patio home, a condo, or you live in a single family neighborhood that has an HOA. You're going to want to ask some questions, specific questions to your agent about that loss assessment coverage. And what we recommend is that you take a copy of your home, you ask your HOA management company for a copy of their master policy that they have. They're pretty much all required to have some sort of insurance for the coverage area. And you can get a copy of that and bring it to your insurance agent and make sure that you're filling in any gaps. You might want to ask if you have a lot of them, the home insurance, your homeowner's insurance might have a $10,000 or a $1,000 loss assessment coverage gap policy. And you want to know about that and have the option to increase that. There may be special deductibles that apply to that are different than your home deductibles. And you want to know what's included or excluded from that. One example I'll give you that brings that home is I recently had a friend who lives in a really nice townhome in Colorado Springs, and they just got hit from a hail deductible on their on their townhome with shared walls with a $23,000 loss assessment to replace the roofs on the townhome, community, and their insurance only covered $10,000 of that. And so that's a wake-up call for that. I see that there's a question. Let me see. So I have a question here. Anna's asking, what if you don't want to rebuild, but you want to relocate? Another excellent question. The answer that I would give for that is it kind of depends. And that is a question that you will want to ask your agent and document asking, put it in an email and get a response if you can, and ask them to point to you in their policy where that's demonstrated, because you should in fact be able to rebuild in another location. The most important thing is that what you're paid out of your policy limits is going to be based on rebuilding what you lost, not what you want to rebuild. So you would basically be rebuilding the paper version of the house you lost, and you could apply that to your new home elsewhere. But some insurance companies treat that a little differently. So it's kind of a delicate question and one that should be asked in advance. It's a great question. Many people do rebuild in other areas. Just keep in mind that you will not be paid for the land. So you will still own the land you didn't rebuild on and can maybe later resell it, but you would have to buy the new land, and that could increase the out-of-pocket costs also. Great answer. Okay, question, I mean, thank you. Let's see here. Okay, so wind and hail are huge in Colorado and often have different deductibles. And we're definitely going to want to understand that when we go to buy a policy, because every different company has different deductibles and different ways they handle this. And more in Colorado, because of the massive hail losses the insurers have experienced, they're starting to kind of add special peril issues for this. So an example would be many insurance companies now are either offering or forcing percentage deductibles, excuse me, on your homeowner's policy instead of a fixed dollar amount. So here's an example policy where you have maybe the dwelling coverage A is $400,000 and it's an all perils replacement value policy. That's great. That's kind of what you want. You want all perils, doesn't include flooding and certain other things like earthquake, but all of the standard perils that are included for a homeowner's policy, and it's replacement value. Now, let's say you have a $30,000 roof hail damage. You have a hailstorm, you get a roofer to come and they tell you your new roof's going to cost $30,000. What does that look like for you based on this policy that you have and the type of deductible you have? If your deductible plan is a fixed $1,000 deductible and you can demonstrate that you have a loss of $30,000 from a covered peril, hail, and it's an all perils policy, then you should have to pay that $1,000 and your insurer may well pay the rest, $29,000. If you have a $5,000 fixed deductible, you would be responsible for that and your insurer for the $25,000. However, if it's a percentage deductible, then that is a percentage not of the loss, but of the value of the dwelling. So if you have a $400,000 home value, a 1% deductible would be $4,000. So, you know, this is going to affect what comes out of your pocket, and it's important to pay attention to that. Let's see here. Let's go on to the next slide. This is a little more complicated example, and I'm not going to get into it in great detail because we're going to run out of time, but I just want to point out to you guys what's really important here. And that is in this policy, and many good companies will have these special perils and hidden costs. Same scenario for you, a $400,000 house, $30,000 in damage, but this policy, like the second declaration page I showed you, has a special peril for wind and hail, deductible of 2%. So you know, be paying $8,000, which is 2% of that $400,000. If that same policy had a special exclusion for cosmetic damages from wind and hail, which on renewal, my recent insurance had, and I actually changed policies because of it, you could end up paying that entire $30,000 out of pocket. If it was determined that the damage to your roof and the reason it needed to be replaced wasn't functional, but was simply cosmetic. So this is an example of some areas where you can have exposure that you don't realize you have. The next topic is flood insurance, and that is, generally speaking, a separate policy. I'm going to touch on it very briefly. I'm going to give you the Flood Insurance 101. You do not have to be in a true flood zone, say next to a drainage or a river, to benefit from flood insurance. As a matter of fact, 40% of the flood claims from the National Flood Insurance Program between 2014 and 18 were outside of high-risk areas. And other things like climate change, fires, you know, many different things can affect your flood risk and be unexpected. You can go online, and again, we're going to make available to you a list of resource links where you can find the link and type it in. You can go to the FEMA Flood Map Service Center and type in your address and see what your flood risk is. Even if you don't have a high flood risk And it may not be required on you from your lender. If you do have a high flood risk, your lender will more than likely require you to have flood insurance. It's still a good idea to consider getting it while it is still a program, a government program that is subsidized. It's very affordable. And if you don't have it, or if you let it lapse, then you may find yourself having to pay much more for it in the future. Some of the private insurers, the big name companies, do offer the flood insurance program directly through their agents. Others don't. Just know it's available in the United States to all homeowners, and you can access it through online, www.floodsmart.gov. There are a few private flood insurance providers, but they're very few and far between, and it's generally quite expensive. There's a 30-day waiting period to start a new policy, and you're limited to $250,000 of insurance for the actual dwelling. That dwelling A type limit is limited to $250,000 for a residential home, single family home. Contents are not generally included in flood insurance and must be acquired separately from the flood insurance program, and is limited to $100,000. And something everyone should know is they do not cover any contents below grade level. So if you have a garden level basement, a walkout basement, it may not cover any contents. And they're very specific in their terminology and what they cover. And the way they describe what a flood is: it's rising water, it has to affect 2 or more properties, and there's no additional living expense coverage or loss of use coverage from the flood insurance policy. I have a slide here, and you will get access again to this information that can help you go online and check your CLUE report, which is like an extended credit rating. It is your insurance rating report. It can include all kinds of stuff that could adversely affect your rates, or even affect your ability to get insurance. It's 7 years worth of information, and I strongly recommend everyone go online. It's free to get one per year, or you can call and have it sent to you. And then you can go through a process. If you find there are errors in that report, it may be that someone that used to live in your same address, or that has a similar name, has a past accident or some other negative item there that's affecting your rating, and you're going to want to get that cleaned up because that can save you money. I want to touch quickly on resources available through the government. The Colorado Division of Insurance is a department of DORA, the regulatory agencies for Colorado. They regulate the insurance industry, and they can help consumers by answering questions, investigating complaints, and helping you understand your policy. They have some online tools, and again, I have them here, but we're also going to have links on our resource link document that we'll provide that gives you some of this guidance in more detail that I've gone over. And they have something that's kind of handy. It's a premium comparison tool for homeowners insurance. It won't really give you necessarily an accurate dollar amount immediately to compare, but what it will give you is a listing of the insurers that are available in Colorado. And sometimes it's really smart to check with some of the smaller insurance companies that are more eager for your business, just to make sure that they're well rated and that they're on the list for the Division of Insurance, and that you do compare apples to apples when you're shopping. We have tools to help you with that as well. There's also a link, an easy link to ask a question or make a complaint. And there are some special considerations for COVID. If you need to file a claim for your automobile accident, for hail or something like that, there are special ways you can do that where you can still protect yourself. And there are timeliness issues. You might be required to file in a certain amount of time. And you can ask the insurance company to give you an extension, given that during COVID, it's harder to get those things done in a timely fashion. So all of these tips I've already talked about. I want to quickly mention, we're running out of time, but I want to quickly mention that it is also really wise to give some consideration whether or not you want to file a claim before you call your insurance company to file a claim. Multiple claims, even if they end up being $0 claims, let's say you call and say, I bumped my car on a curb and damaged my bumper. That may be, maybe that's a $400 damage and your deductible is $500. You're not going to gain anything by filing a claim, but it could negatively affect your rating and your cost for insurance in the future. So you want to give it some thought. However, there are specific duties and deadlines that you have always under your policy, and you don't want to ignore them. So if you think there could be additional damage that you're not aware of, you really want to pay attention to those deadlines and make sure you can file a claim should you find it's in your benefit to do so. That's why you pay these premiums all these years after all. So do your best always after an accident or any kind of damage that might be covered by insurance to secure your property, to protect it from further damage. That's one of your duties under your insurance policy. If anyone was injured in a car accident or in your home, you must notify your insurer if you want to protect your right to be covered under your liability insurance, or your auto insurance, or your homeowner's insurance. We found following the fires that there can be hidden damages and increased costs that are not immediately evident. There could be damage that it takes a full cycle of, maybe freezing and heat to show up later, or a hard windstorm from a certain direction, or something like that. So you want to make sure that you don't lose out on your valuable coverage for increased damage that might happen later on. So if you do have significant damage to your home, you want to err on the side of caution. We have a lot of resources for you guys. If you do find you have a claim, we recommend that you keep information about United policyholders, and you hop online. If you go on our website now down here at www.uphelp.org, you will see that we are currently posting information on the 2020 Colorado wildfires. We are about to jump in and do some recovery webinars for the folks who have had loss following those wildfires. And even if you have a burglary, a car accident, a hail loss to your home, no one teaches Insurance 101. You don't generally get it in high school or college. It's just not something that our society really spends a lot of time teaching people how to navigate, and it can make a huge difference. It is a business negotiation with your insurance company. Your adjuster may be very competent, and they may not be very competent. They may be under a lot of pressure and have different goals than you have. So you're your best advocate always when you're working a claim. Reminders, it is that business negotiation, and you need to stand up for yourself. You pay for coverage and claim services. as a part of your premium. So it's okay to ask for help if you need help. And you got to do some work to get a full and fair settlement sometimes. Don't be afraid to go on that Division of Insurance link and file a complaint if you feel like you're not getting the service or the answers you need. That no one will punish you for that. It will just get their attention and get you some help. We really appreciate you taking the time to do this. It's people spending time on preparing that helps a whole community to be resilient and to be able to recover when we have events that are traumatic to the community. And I want to now switch over to answering some additional questions if anyone has some. Anna, I think I kind of missed her question a little bit initially. Her question now is, if you don't want to rebuild, but just want to buy a new home instead of rebuild somewhere else, I'm going to kind of go back to that question and say it's sort of the same thing. You can take the resources made available to you through your policy for the loss, that dollar amount, to replace what you lost and apply it to something different. But the claim will be based on the home you lost, not on the new home you build. And again, you will be buying a home that has upgraded code requirements, possibly, and land that you will have to pay for. So just be aware that the costs will be different. And it's a good idea to make sure you wrap your arms around what your coverage will be, what you are going to get from your insurance company before you commit resources to buying something new. Let's see if there's anything else here. Does anyone have any additional questions? We will send out an email to you all that have registered with some links tomorrow, if not this evening. And I hope you feel that this was time well spent. Please let us know. And you can always ask additional questions. Hop online. We're happy to be of service, and spend some time on our website. I think you'll find a lot of help there. Thank you so much. Wish you best. Take care and have a good evening.